Hi, I'm Lon Shaver. I'm president of Silvercorp Metals, and I'm pleased to be on this show with Crux today to run through a few key points that are important for investors to know about Silvercorp. This slide highlights a number of key items that are important to cover off when talking about Silvercorp, and you can see from the title, high margin silver producer. Well, what does that mean? That means we're a profitable silver company, and we'll get into that and show exactly how profitable and why. Also, another key element on the slide is talking about compelling value proposition. I think we'll wrap up at the end talking about how Silvercorp is undervalued compared to its peers and worth a look by investors. So we're a silver producer. We have a bullish view on the metals markets and silver in particular, as silver is becoming increasingly important in this transition to a low carbon future. We're profitable because of having high quality assets. So that means low cost mines and they're long life. And this is what allows us to make investments and plan for the future, in addition to delivering this strong, immediate performance that we're seeing in our financial results. We recently made an acquisition that's taken us to Ecuador, and we're looking forward to building the El Domo permitted construction phase project, which will be a copper gold mine when it's in production. And as well, we picked up a earlier stage project, Condor, which is a high grade gold project that we think will be a great contributor down the road. As I mentioned, high margins, that's really what allows us to deliver the financial results that we have been. And really, these margins outpace our comps and is really a function of our asset quality. As part of our strategy, we're looking at growing the company, and this growth is funded in terms of the existing projects that we have on the horizon. We recently completed a convertible debenture offering, which has really increased our capacity to go out and be aggressive and look at other assets. So talking about silver, this slide says it all. The world needs more silver. In the chart on the left, you can see that black line. That is total supply coming from mines. It's been stagnant, in fact, trending downwards. And you can see the gap that has existed over the last few years. Roughly 200 million ounces of silver has been the deficit between supply and demand. And you can see in the chart different uses of silver, and one that's been obviously the big growth component everyone's talking about is the solar cell demand for photovoltaic cells. That's that gray chart, and you can see that's been expanding in recent years, and everyone expects it will continue. Silver is also big in electronics and in other industrial uses, and that green section of the chart at the bottom shows that. And within that, automobile manufacturing is becoming an increasingly larger user of silver, and current stats and reports indicate that 90 million ounces of silver is expected to be consumed in the auto industry starting this year and going forward. So we think the picture for silver is bright, and that is currently 62% of our revenues. So we're very well positioned to benefit from strong silver demand and higher silver prices. Now, in terms of our asset base, we're operating two mines in China. You can see the Ying mine is the larger one, and the GC mine. And between those mines, we've produced over 100 million ounces of silver since we began operations in 2006. We've been doing that with very positive ESG ratings from a number of the agencies. And our mines have been consistently profitable and have delivered profits in excess of 500 million, which has allowed us as a company in turn to return over 200 million to investors through dividends and share buybacks over the years. We're currently sitting with 355 million in cash as of December, and that includes 143 in terms of net proceeds from the convertible debenture offering that we completed in November. On top of that, we also have investments in other mining stocks, which was worth 73 million. And that's largely comprised of an investment, 27.4% stake in another public company, New Pacific, which gives us exposure to two great assets indirectly in Bolivia that are being advanced. But talking about our mines, the two mines we have in operations, I mentioned, we're adding to that a third mine, which is the El Domo project in Ecuador. which we picked up through the acquisition of Adventus in 2024. Over the last 12 months, we've delivered operating cash flow of $118 million. And in terms of growth, we're looking at our existing production profile, which for this current fiscal year, we're targeting 8 million ounces of silver equivalent, plus lead and zinc, growing to 10 million ounces in fiscal 2027. So that's a 25% increase. I mentioned earlier, silver is our biggest metal. Over the last 12 months, it's been 62% of our revenues. And over that same 12-month period, looking at our all-in sustaining cost to produce that ounce of silver was under $12 US per ounce net of our byproduct credits. So we've been able to achieve these kinds of results because of our industry-leading EBITDA margins. And most recent quarterly period, that was 46%. A bunch of lines on this chart. I think the key thing to look at is the peer average is the dotted line significantly below us. And it's these margins is what allows us to deliver the financial results that you can see on the right-hand side, when things are going well. And that is we've been increasing production. And on top of that, we've been benefiting from higher silver prices. So, this is the leverage that investors should be looking for when looking to make investments in the sector. Our operations are demonstrating a performance and a response to these higher prices. I talked at the beginning about being focused on growth, and we're fully funded at present for our organic opportunities, as well as to seek new ones through M&A. And I think it's important to recognize, looking at our assets in China, we have 100 million ounces of silver equivalent in the proven and probable category. And that's just looking at gold and silver converted to silver equivalent. So that works out to roughly a 15-year mine life, and we're sitting with that after having produced 100 million ounces of silver equivalent. But on top of that, we have another 120 million ounces in M&I resources, not included in reserves, and another 103 million ounces of silver equivalent in inferred on top of that. So we feel that this resource base will support further mine life extension, as well as the increases in production that we're expecting. And that's why we've been making investments at Ying to grow the production profile. In 2024, we completed two significant investments in terms of being able to increase our production rate. And that was expanding our mill number 2 from 2,500 tons per day to 4,000 tons per day. And we did that for a very modest $7 million. And we constructed our third tailings storage facility at Ying, which we also completed in late 2024. Both of those projects on time and under budget. So now we're going back and looking at our mine profile and working through a program to enhance mine mechanization. And so that will mean reducing labor intensity, getting more tons out of these mines. So we've been investing over recent years in larger ramps to be able to put new, larger equipment, and shifting our mining method to a more bulk mining method we've used before. In addition, there's a satellite target at Ying called Quanping, which is 33 kilometers north, and we basically got that ready to go and to start development. And ore from that mine would be trucked down and processed at the Ying facility that we've recently expanded. Looking at Ecuador, as I mentioned, we're fully permitted and we're in the midst of construction, early stages of construction for the El Domo copper gold project. It's planned to be a 10-year open pit mine, which will produce 24 million pounds of copper and 1,000 ounces of gold annually. The feasibility capex estimate of $248 million will be funded by our cash on hand, which, as I mentioned, $355 million. But as well, the Wheaton stream arrangement that's in place requires them to contribute $175 million towards that set of capex. Construction's underway, and we're targeting first production in the second half of 2026. And as well in Ecuador, we're working through some plans for exploration, drilling, putting some declines in at Condor, redoing a resource estimate focused on an underground operation, and then working on a PEA for such an operation that we plan to release later this year. And we remain on the hunt looking for exciting acquisition opportunities that are the kind of high margin assets that are either in production or can be brought into production on a reasonable time and cost basis. So despite this great story of profitability, growth, and diversification, we find ourselves trading at discounted multiples relative to our peers. And we're looking at addressing that by growing the company's footprint and size in terms of how many operations and how much free cash flow can we generate. Looking at these numbers, if we get anywhere close to target, peer median numbers in terms of multiples on an EBITDA or a price to operating cash flow, that's at least a double from where we're sitting currently. So just to recap, profitable silver producer with good margins, planning internal growth, exposure to other assets, and building a new mine in Ecuador, and remain on the hunt looking for interesting targets that we think can grow our company. We invite shareholders to join us for this ride and to see that re-rate in our share price.